Hello investors, welcome to another M1 Finance portfolio update. As you can see here, my account value is at $2,402.87. I am down 7.23%, which comes down to $129.27. I do have $8.05 of earned dividends that have been paid also, so that offsets some of the loss to $121.22. My pies are down. All of them are down. The dividend aristocrats doing the best right now. That only being down 3.11%. My growth and value pie is down at 13.38%, and my dividend pie with just all the REITs and the dividend ETFs is down 5.47%. But before I go over my stocks in those particular pies, I wanted to talk about something real quick that I was gonna talk about in my video that I was gonna post this weekend, but because the audio went wrong, or I don't know, something happened to the audio where it wasn't, you couldn't hear it. So I had to remake the video, but I just didn't have time this weekend, and I haven't had time on Monday either. So sorry about that I'm late on the video. I was gonna make a video, and I would say it's also a good thing that happened, because then I have to remake the video, because the more I thought about it, I think I finally answered my own question. So I was gonna talk about how I thought M1 Finance was buying shares at a premium, or buying them more expensive than they were trading for at the market value, at least. I had some particular examples that I was gonna show. So Microsoft, I bought maybe a week and a half ago, I bought a zero point 0.02 shares at $110.37. So $2.61. But then I looked, when I clicked on that particular trade for Microsoft, it took me to the Microsoft profile, and I showed me what it was trading for that day. So Microsoft was trading at $109.88. It's up 1.27% that day. So I was thinking, like, wait, why would M1 Finance buy it at $110 when it's trading at 109? And the same thing happened with Alibaba, 0.01% at $145, $1.79. But the stock was at $143.45. And Apple, 0.009 at $220.24. So $2.14. But the stock was trading at $219.78. So I was thinking, like, man, is M1 Finance buying shares at a higher price, or what's going on here? But then I thought about it, and then it makes sense now. The more I think about it, that yes, M1 Finance might have bought those shares of Apple at a 220, and the stock was trading at 219 when I clicked on it. But that doesn't mean that the stock didn't go up higher than 220. So M1 Finance just happened to buy it at that particular price, at least I think. Even though the stock was up at their particular moment, 1.74%, doesn't mean that it wasn't higher earlier in the day, and it just went lower. When I checked that, as you can see here, 2:44 p.m. And that makes more sense to me. And I would say that's one of the disadvantages of M1 Finance, that you can't control the time or the price that your shares are bought in. M1 Finance has a window, I think, at 9 a.m. Central Time. Whenever you put in your trades the day before, or if they're automatic trades, M1 Finance just buys all the stocks at that particular time, and whatever the stock price is whenever they're doing the trading, that's what you get. So if the stock goes down later that day, hey, sucks for you, right? Or if there was a better buying point later on in the day, nothing you can do about it, because M1 Finance already closed their trading window. Something to be mindful of if you're thinking of investing with M1 Finance. You can't control the time that that your stocks are bought in. But anyway, just wanted to go over that real quick. That's what I was gonna talk in my video, but it's now I just made that a shorter version of it, since I think I figured out what happened. But just again, something to think about if you're thinking of investing with M1 Finance. Anyway, let's go over my stocks right here. So the dividend aristocrat, like I said, is down 3.11%. Johnson & Johnson, I am up in that position. AT&T, I am still down, but just not as bad as it was last week. It did go up a little bit more. It's currently trading in like low 30s. I'll try to buy more shares of that. Pepsi, I am up in that position. Procter and Gamble, I'm still up from their earnings report last week. McDonald's, I'm up in that position. Lowe's is the biggest loser in this particular pie. I am down in that position. Walmart, I am up in that position. I was in the red in that position for at least a couple weeks, but now it's finally in the green. Coca-Cola, I'm up. McCormick, I am also up. But 3M, Kimberly-Clark, Emerson Electric, BF Corporation, Cintas, and Colgate, I am down in those positions. Overall, I am down in the whole portfolio. Like I said, 3.11%, but to me, that's not too bad, honestly. And again, this particular stocks aren't really for their capital appreciation. I don't really, like I said, I don't expect capital appreciation even this year. They could be in the red, but as long as they pay me that dividend, if they grow a couple percentage points next year or even in 2 years, that's fine for me. Just keep paying me those dividends. And right here, I got $2.27 in earned dividends from my Dividend Aristocrat pie. My growth and value pie, I did make some changes, but right now, just go over it real quick. Facebook, I am down in that position still. Microsoft, I am down. Apple, I'm down, not as much, only 5, almost 6%, but compared to the other ones, pretty low. Amazon, I am down in that position big time also. Google down on that position. Alibaba also down. Disney, not as bad, only 0.5% down. 15 cents. And JD, I'm still down in that position. Tesla and Starbucks are my only green stocks in this pie, as you can see here. And Tesla's still in the green from their last earnings report, but the things that happen with Tesla all the time and Elon Musk, I could very well lose this capital appreciation that I got from Tesla next week for all I know. So I would say don't think about it in the sense that, don't focus on it short term or on your stocks, not necessarily Tesla, but any of your stocks. Don't think about them short term because yes, you might lose capital appreciation the following week, but think of it in terms of years, not weeks. Starbucks also in the green, which pretty cool, but who knows what's gonna happen in the next week. Netflix, my biggest loser in my portfolio here in this particular pie, and then FedEx, UPS, IBM, and Home Depot. I am down in all those positions. My dividend pie, the only one that's green in this particular pie is my Realty Income Corporation, and the rest are all in the red. But it's fine. They're all REITs pretty much. And I did move some of my money allocation in this particular pie. I did increase my money allocation from Realty Income Corporation. I did decrease my domestic dividend master pie when I first opened this portfolio. I reduced it to 5%, and also I increased my Apple Hospitality REIT allocation to 15%. So Gladstone Capital Corporation and Gladstone Investment Corporation, I increased them slightly to 13% also. And the rest are just my dividend-based ETFs. Oh, and I just wanted to go over this real quick. I did change my allocation in my growth pie. As you can see here, Facebook's still 15%. However, Microsoft is now 15% of my money allocation in this particular pie. And Disney also increased it to 15%. The ones I decreased for that to happen was Amazon and Google. And a few others, I decreased them to all to 1%, including Netflix. So right now, I think my money could be doing more for me if I put them in Disney and Microsoft as opposed to Amazon and Google. I do still think they're great businesses, but I can take better advantage of the Microsoft and Disney dips than I can of the Amazon and Google dips right now. I do think Amazon's going to go a little lower probably. Google, I think right now is a great buying point actually. So, but it is what it is. I think Disney and Microsoft are a better value for me, at least at this moment. And just to finish it off, just want to show off my my shares that I have right now: Gladstone Investment Corporation and Gladstone Capital Corporation. I got 7 shares of Capital Corporation and 5.88 shares of Investment Corporation, almost 6 shares. Apple Hospitality REIT, I'm very close to getting a full share there. AT&T, I should be getting a full share this week. JD, not too far there. I should be getting a full share, I would say, in the next 2 or 3 weeks. Coca-Cola, not too far there, and I should be having a full share of another full share of Coca-Cola. I would say in the next 2 or 3 weeks also. Microsoft, Procter and Gamble, I should be having a full share of those. Hopefully this week, but if not, definitely next week. And Facebook and Colgate also. Maybe not, but maybe, who knows? At least if it doesn't happen this week, it will definitely happen next week. So at least in the next 2 weeks, I should have a full share of Microsoft, Procter and Gamble, Facebook, and Colgate. And all these other shares, I'm still building up in those positions. But like I said in my video, slowly but surely, they're building up as I put in with those pennies and putting all those fractional shares. Amazon and Home Depot are the ones that I have the least amount of shares in, but with at least with Google and Amazon, as you can see here, they're both pretty low. Not that I haven't invested money, as you can see here, I got $82 that I invested in Google, and $93 that I invested in Amazon. I am down in all those positions, but I think that right now at this moment, I would rather put all my money, like I said, in Disney and Microsoft, because I think they're a better place for me longer term. But anyway, just thank you for watching. If you liked the video, just give it a thumbs up. If you didn't like it, give it a thumbs down. Let me know what you liked, what you didn't like about it. Leave any comments. Let me know if there's any investments that you think I should be looking into, and investments that you thought I shouldn't be investing in. And if you like this kind of content, I try to post updates in my M1 Finance investment portfolio every week. Again, thank you for watching, and we'll talk more in the next video.